Hey, it's Mike. I am not an investing guru. I'm an average guy sharing my investment journey on the internet. In today's video, we are talking about my 0 day to expiration wheel option strategy, as well as selling my covered calls on Tesla the last week. In the last week, I've made about $339 in selling daily options on the S&P 500, as well as about $3,000 in my covered call positions in Tesla. So the first thing we're going to talk about is we're going to go to my portfolio. The thing that I like to track a lot on this channel, because we are using margin, is my margin status. My margin status on this channel is indicating that I have a low risk. I have about a $121,000 buffer before I would be in a position where I would need to be margin called. Moving along, a couple of other metrics that I like to share on this channel is how much margin utilization I have, or margin used. I'm at about 18.73% of margin used, or that is coming about to be $42,904. I don't think I mentioned this in my last video, but what I have been doing is, instead of taking my income that I've received from these income investments, I've been setting aside as cash. Instead of the reinvestment, we've been setting aside cash, just because I think that the S&P 500 and the overall market as a whole is starting to look a little frothy. And to me, there's really no point of reinvesting money back into a really frothy market. I'm an avid, I don't believe in timing the market. However, when we're starting to have PE ratios look unrealistic and company earnings aren't as high as they're supposed to be, there's a discrepancy, and this is where I believe value can be made. So instead of reinvesting that money back into the S&P 500 or back into those income investments, I'm just setting aside as cash. As you saw if some of y'all who've ever been staying around here, you see that most of the time I've been utilizing all $60,000 that I borrow, and my margin used would be about $58,000 minus the $500 that I set aside for interest. However, as you can see here, I have $42,904, which means I have about $17,100 set aside from all the income that I have acquired from these investments. Moving more along on this Robinhood page is my margin use. So again, margin use, we talked about that. Margin maintenance, $65,410.39. So because I have been setting aside more cash, this margin maintenance was actually a lot higher, closer to about $80,000. But then since I've been setting aside the cash, that margin maintenance has been coming down. What I would like to say is, when I'm doing the 0 day to expiration option strategy, when I am doing a full 100 shares of the S&P 500, it is setting aside the $58,300 as option collateral, but it doesn't get put into the margin maintenance. However, once you get that assigned, then since the S&P 500 has a 25% maintenance, it increases your margin maintenance about $15,000. So when I did get assigned this last week, my margin maintenance went from $65,410 and it went up to about $80,000. However, when I was selling cash secured puts, my margin maintenance was actually about $125,000, because they set the actual total numeric value as option collateral and not the actual margin maintenance that is used when you have it assigned. So just something worth noting and keeping in mind. So carrying on, these are all the different options that I put in for my 0 day to expiration strategy. So if I add up all my option premium, which comes out to $241, as well as the capital gains from being assigned and then selling a strike price above that, paying me about $98.35, which the total comes out to $339.35. And then moving over here, my initial income when I started this option strategy 2 weeks ago was just to make that 6, 7, 8%, just, utilizing that option income or that option collateral that's set aside that you're not even really using. And I was making close to about $20 a day with that. However, after thinking about it and then talking about what I just discussed, where if you actually have the shares assigned to you, your margin maintenance is much lower than having option collateral set aside. So what I started doing is I started upping the deltas. So I went from about 10 or 15 delta in this area, and then I bumped that delta up to about 25, 30. And that 25, 30 is a good trade-off between getting a strike price that you want, as well as getting a decent option premium. So let's go over to the S&P 500 chart over here, and for whatever reason, they don't have the 14th here on the 5-day. And my initial option play that I did was I made $56 in option premium, and I didn't get assigned. So for the most part, my first 2 days, day one, I did not get assigned, but I believe in day two, I did get assigned. So I sold a cash secured put. I sold the 583 cash secured put. It dropped down to 579. So, when you're selling a cash secured put, you're assuming that the stock market's going to go up. However, on the 15th, I sold here somewhere, the 583, and then the share price ended up being 579. So technically, I did not buy the S&P 500 at a price that I wanted. I should have done a more conservative delta. However, I was looking to get the $50 with the premium, and that was it. I got assigned. So then technically I had to dig myself out of a hole, which really wasn't that bad of a hole, because ultimately the first day I sold an option contract where I made only $12 at the, I sold the 584 and it closed at the 582. So we really weren't that far off. So I sold the 584 somewhere over here. And this is kind of when we got in over here. So again, it didn't hit this full price here. Moving along, and then the following day I sold the 52. I sold the 585, and then it closed at the 582. Oops, wrong thing. So today is like this, was that the 16th? 17th. Okay, so on the 17th here, I sold the 585 all the way up here, but then it closed closer to 582. So, the stock market went down, it hit this high. It looked like there was some resistance up here. There's no support, or the resistance it wasn't able to punch through. There was an opportunity here, but did not. And it looks like it was consolidating here, took a drop here to this next support line here, consolidated a little bit, and then started making its way higher, which then ultimately leads us to the last day on the 18th. I sold the 584 strike price for a $50 premium. It closed at 584.59. So the nice thing about this last move I did is I share price was here. I sold the 584 here, and then ultimately the end price ended up here. So, that to me was a decent trade. And the reason I believe is a decent trade is if the close price is 584 or 584.59, and you sold the 584, you really didn't lose that much in income. And that's one of the things about these covered call style investment strategies that we're making this income is you cap your upside. However, if you can do this right, you can kind of time the upside to about right where your covered call would expire. And so for the most part, even the fact that it did get assigned, it wasn't a big deal because it was only 60 cents off. It wasn't like $3 or $4 off. And those were the plays for the S&P 500. So again, this $339.35. And moving along to now my Tesla positions here. So on the 14th, I sold covered calls on my Tesla positions. I have 834 shares, so I was able to sell 8 contracts. And the strike price that I chose was $235, and I'll tell you why I chose that in just a moment. Premium was $390 per contract, which comes out to be about $3,000 in option premium. Okay, so on Tesla here, the last 5 days is kind of on this day was they had Tesla had a robo-taxi event on Thursday, and then all of Friday, the stock just dropped like 7, 8, 9, 10%. It dropped all the way down here. And then on the 14th, somewhere around this area is when I decided to sell a covered call position. When I decided after doing some chart analysis here that for Tesla to recover this massive drop, I believe that the 235 right here would be like an adequate number, where even if it did start making its way up, I think it would have consolidated. And then I believe in the long term, it actually might go down. So even though I'm bullish long term for Tesla, I think in the short term, Tesla doesn't trade that well after October, November, and up until February, Tesla usually trades more so on the downside. So if you look here, this is your last point of resistance before the stock can probably drop down all the way to the 200s. So in my opinion, I believe that if I'm selling a covered call, I think this would be a pretty good resistance line to put the chart in. And that is exactly what I chose. So this option expires on the 25th. So I have this whole next week to see if this is going to hit exactly what we said it was. So if we just go back to here though, this last week, we actually have been having very low volume. So if you see the volume here, we've been buying and selling low volume, whereas over here, clearly it was much more. So I think a lot of investors are waiting for the earnings event on Wednesday to see what they're going to do with this stock. But hopefully I can retain my shares and it doesn't break past 235. If it does, then I will, when the day gets closer, I will roll that position. All right, well, that is my $3,400 worth of option income investing for the last 2 weeks. If y'all have any questions, definitely let me know. For the most part, I'm still a newer option investor. I've done option investing on Tesla before, but I like option investing on the S&P 500 just a bit more because even though I'm not getting as much option premium, it's less volatile and it's a lot easier to predict. Whereas Tesla has such violent swings, it is much more difficult to put your finger on the pulse and gauge what needs to, like at what point are you selling covered calls or cash secured puts and whatnot. So far, I mean, looks like the income is good. Again, my goal is about $1,000 a month on the S&P 500 0-day to expiration wheel strategy. It looks like that first week I hit 339. This is actually the second week. The first week I hit about 250. This one is 339. So we're pretty much on track to hitting that. For my Tesla position, my goal is also to make about $1,000 a month. However, I went a little bit more aggressive with that specific option play because just by doing that chart analysis, it looks like that Tesla is going to be retreating down for the short term. Again, I'm a long-term bull on Tesla, but I think in the short term, looking at the chart, Tesla looks like there's going to be a little bit more pain coming up. But again, this is nothing new. If you have any questions, please let me know. I love answering questions. And then, hopefully this inspires you to start doing a strategy like this or, make some extra income for your family. Besides that is all. And I hope you all have a good one. And also don't forget to check out my brother's channel. It's called Premium Harvest. What he does is he does advanced margin strategies to build income. So what he does is he took a HELOC loan against one of his rental properties, used that money to buy income investments, then use that cash to borrow more money in Robinhood. And he's using that money to pay down that loan, and he is doing really well with that. So definitely don't forget to check that out. Besides that, have a good one.